Inflation. Well, let's welcome in Lyn Alden, founder at Lyn Alden Investment Strategy. Lyn, great to have you with us here back on the program. Thank you for your time. Prashant here. Just a quick word, Lyn, on the roadmap for global equities from here as you see it. Do you see enough there to sustain a bit of a move, a rally here, or you think it's a bit tricky here?
I would be cautious until we see new highs on major indices. I think the biggest variable to watch right now it actually probably ties to Chinese economic policy in terms of both fiscal and monetary policy. That's probably the biggest lever right now. Their sluggish kind of domestic economy continues to weigh on commodity sectors, continues to weigh on a number of industries. And they have the tools to reverse that should the pain of the current situation offset some of their other goals that they're pursuing. But overall, across their fiscal and monetary sector, I think that's probably the biggest variable. And until we have more clarity on some of that, as well as some other variables, I think we're in more of a neutral zone right now for a lot of different risk assets.
Okay. Lyn, hi, morning. So what's the sense for Wall Street now if we get the rate cut as planned? First of all, what camp are you in? 25 basis points, 50? And if it's 25 and there is a semi-Goldilocks scenario still playing out, is it still a risk-on market that we're looking at?
Right, so I lean toward 25, but I don't have a strong conviction on what this one rate cut's going to be. I do think we're going to see a series of rate cuts. My expectation is that it's not going to be particularly impactful for the U.S. economy because so much debt is locked in at much lower fixed rates. I think around the margins, it's more impactful for financial assets at these levels when we're talking about 25 or 50 basis points, as well as powerful for the dollar index and global markets. And so that's a variable that I'm watching, but it's actually not the biggest variable on my radar right now. I think right now the Fed is kind of overstated in terms of how much emphasis people are putting on it. And there are other variables in the economy, global economy, that I think are currently understated.
All right. Hi, Lyn. Good morning and good to see you, Win. This is Nigel on this side. Well, you have mentioned this in the past, and it's known, right, that if there are rate cuts, then we'll have to look at emerging markets, and some of them could potentially gain. How are you placed in a market like India?
Yeah, I'm broadly bullish on a number of different markets. So India, Latin America, China around the margins. There's a number of different markets that I think are good. I have some near-term concerns because the dollar index could be showing signs of a short-term bottom, a little bit oversold in the intermediate term. So when we look forward a little bit, I have a little bit of concern around, say, gold being overbought and the dollar being a little bit oversold. So once we get through that and get a little bit more clarity, I'm still structurally bullish on emerging markets and various anti-dollar plays as the Fed goes through a longer-term cutting cycle.
Lyn, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC TV 18. As always, quick conversation with Lyn Alden, founder at Lyn Alden Investment Strategy.